So as you guys know, I allocate about 10% of my Robinhood portfolio to SPEC stocks. I also have an M1 Finance account. I also have an E-Trade account, but when we're talking about stocks on the channel, we're usually talking about Robinhood primarily and then a little bit of M1 Finance as well. But when looking at just like my Robinhood portfolio, about 10% of that I allocate to speculative stocks just entirely, just 10%. And that is comprised of 3 SPEC stocks, and those happen to be Tesla, usually hovers at around 5% of my portfolio. NEO usually hovers at around 3%, and then 2U was always at like less than 1%, but then recently it crashed by a gigantic amount, so I added a lot more to it, and it increased to like around 2% after I did a lot of new buying. Well, I just sold one of those stocks, and this is probably not a surprise to any of you, but that stock is 2U, ticker symbol TWOU. It's a stock that has been very challenging to say the least, recently especially, but I think it's important to give you guys an update video and tell you guys whenever I make a change to my portfolio like this. So that's why I'm doing this video. I hope you guys can appreciate that or enjoy this. If you do, please consider hitting the like button. It really helps support the channel. But in case you're new to the channel, I just want to give you like a quick recap of what happened with this stock. I want to let you guys know why I decided to sell right now. And I want to also let you guys know how much it affected my portfolio and where I'm going to be moving this money to, like what stock do I plan to buy now that I'm going to have some extra space in my speculative portion of my portfolio. So anyway, that's what I want to do today. I hope you guys enjoy this. Let's get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. So in case you're not familiar with 2U, they are an online education company. So they actually partner with some of the biggest universities in the country, universities like Harvard, Yale, USC. They're also a little bit of a global company. They're entering a lot of international markets as well. And they also do a lot of workforce training, which I actually think that there's a lot of future potential there. So that's, you know, some of the reasons why I really like this company, because they're also offering like these bootcamp training classes where they actually train you how to do like things like coding that I think are going to be very big in the future. Now, I first purchased the stock back in May after they crashed by over 25% in a single day after announcing earnings that disappointed, but I only made it less than 1% of my portfolio because the company struggles to be sustainably profitable, having lost millions of dollars every year, so I considered them to be very speculative, and I never invest large amounts of money in companies that I consider, again, speculative. But I decided to give them a chance because I really see most forms of education headed towards an online system in the future. In fact, traditional enrollments have mostly been going down for years, but online education has always been trending upwards. In any case, fast forward to last month, and the stock crashed yet again, this time by 65% in a single day, all the way down to just $11 a share. And what happened was that management basically came out and said that they will be cutting their new launch graduate programs by more than half next year, mostly because of a more competitive environment with an increase in regional competition. And this was mostly done in an effort to cut costs and improve their profitability, which, by the way, they continue to see an increase in their net losses. In fact, they actually increased their guidance for their net income loss to be more than double what it was, what they were guiding for before. This is a screenshot of their previous guidance for the year, and then here is a screenshot of their new guidance, and you can see that it is literally more than double the amount that they were previously guiding for. So this is a company that continues to lose a ton of money every single year. But when analysts asked during the earnings call for more details on how they will become cash flow positive in the future and when that might actually happen, management basically told them that they will have to wait until Investors Day in November, where they will offer more clarity. And this was extremely frustrating to analysts and the rest of Wall Street, which led to downgrades, a major sell-off in the stock, and a rise in short selling. The thing is that you can't just come out and say that you will be cutting your launch programs in half half next year, which by the way make up like a large portion of their growth, and then refuse to answer questions about it until several months later. I think they'll even have their next quarter earnings already announced by that time. But even still, I think this crash was overdone. There's no mystery to why this happened. This is a very high growth stock, so anytime that you mess with that growth, you're definitely going to see the stock tank. But when you look at future projections, notably from Yahoo Finance, it still looks like the company will be growing at some decently high rates in the future. Here's a chart that I made of the revenue for the past 4 years, and I added 2019 and 2020 expectations from Yahoo Finance, and you can see that sales are still expected to grow to nearly $750 million next year. As growth percentages, that would still be growth of around 38% this year and 27% next year. So while that is a very noticeable drop in growth, it's still pretty high growth rates nonetheless. So as bad as the earnings were, the stock crashing by over 65% in a single day was really overdone in my opinion. And as a result, because my position was so tiny, I decided to double down and eventually even triple down on my position so that I could recoup some of my losses. And it turns out that I wasn't the only one to do so, as 2U insiders started gobbling up shares as well, spending millions of dollars to buy hundreds of thousands of shares. And this is only between 5 insiders of the company, and because 2U was already so heavily shorted, which also caused the stock to tank by such an enormous amount, a short squeeze inevitably followed, and the stock has shot up like a rocket ship ever since. Having insiders buy so heavily into the stock not only helps bring back investor confidence, but it also forces shorts to cover their positions. So at this very moment, who knows how much higher the stock can go? Maybe some good news comes out in November and the stock is up another 50% at that time, which, knowing my luck, it'll probably happen. And then I'll get comments in the comment section from people just calling me an idiot for selling out of the stock. But I don't really care, because I've lost confidence in this management team for their long-term kind of strategies, and it's just not really worth the risk considering how volatile and how speculative the stock is, because anything can really happen in the short term, but I don't make these type of short-term predictions. I'm a long-term investor, and when I look at the bounce off of the bottom of $11.37 to where the stock is trading at the time of this recording at $19.34, the stock has now increased by over 70% in just the past few weeks alone. And because I bought the stock so much heavier after a crash, the portion of my portfolio in this stock has increased to over 2%, but it also left me down by only around 11 to 12% in the stock right before I sold out. Don't get me wrong, a loss is a loss and there's no excuse for that, but considering that this was a stock that crashed by over 65% because of a sudden change in their entire business model, being able to cash out at less than a 12% loss, I don't think that's necessarily a very bad outcome. In fact, only losing around 12% in a stock that is only worth around 2% or a little over 2% of my Robinhood portfolio means that my portfolio has only dropped by around 0.2%. For context, my portfolio is up around 11 times that amount just in the past week alone, so I've already made up around 11 times more than the amount that I lost in this stock just in the past week. And again, I'm not saying that to brag. I still made a mistake with this stock and I lost some money as a result, which is justified. It's what should have happened. But the reason that I clarify this is because I believe that it's important to limit your exposure to high risk and very volatile speculative stocks so that you don't lose too much money if things go south. Here's a screenshot of the last time that I showed you guys my portfolio, and you can see that the vast majority is in these giant and very profitable companies like Microsoft, Amazon, and Disney, which, by the way, I've been buying for years. This is all very well documented on the channel, and I'm up a lot on these positions, but that's because I invest long term in very well run companies that have great management teams and that I have a lot of trust and faith in their business models. So if any of these stocks happen to dip or even crash, I know right away that I should immediately buy more of these shares, and I don't even have to think twice about it because these are the glue and the foundation that holds my entire portfolio together. And I really trust their management teams, especially Microsoft, who in my opinion has one of the best CEOs in the world. You also take a look at a stock like AMD, which I also think has one of the best CEOs in the world. world, and that used to be like my second biggest stock. It used to be like a 20 to 30% position of my portfolio. Again, this is all documented on the channel, and I used to buy the stock very heavily at around $10 a share, and then I ended up selling the stock in the 20s and in the 30s, and I made a ton of money on that stock. And it's all because I stuck to my long-term fundamental strategy of investing in good companies with good management teams that have very clear strategies and goals for their long-term business models. But when I look at 2U, for me personally, there's just a couple issues that I have with the company. Now, I still think that they have a ton of future potential, and I like a lot of the things that they're doing, but there's a couple reasons why, for me personally, it just doesn't make sense to keep investing in them. And the first issue is that I lost some faith in the management team. I think it's pretty crazy that they went out on this earnings report, and they basically announced that their net losses will be more than double what they were previously guiding, and they announced that they're cutting their launch programs by more than half for the following year, which is going to affect future growth as well. And they didn't come out with answers to some very important questions from analysts, and basically told them, well, you're just gonna have to wait a few months until we give you more clarity. I think that is pretty crazy. I think it's ridiculous that you come out with that kind of strategy. I'm not trying to throw shade at their management team, but I'm just saying that personally, I lost some faith in the management team when they did that. Number two is that I think that their whole business model does need to change. They've pretty much admitted to this. They've said that they are cutting back on their launch programs, which is going to hurt growth, but they're doing it in order to be more profitable in the future. That is a fundamental change in their business model, which up to this point was all about very high growth. And when I look at what they're doing in the education market, there's increased competition there. So some changes need to be made because they're still growing, but those losses just continue to stack up and stack up and stack up, and they're not sustainable. So something needs to change there. I think they need to limit their exposure to that market and increase their exposure to the workforce training market, where I think that there is a lot of potential in the future. And they're going to do that. I think it's great what they're doing, and I think that they will do well there. But when a company is doing a fundamental change in their business model, you have to absolutely have some faith in the management team, which I don't have. So for me personally, it just makes more sense to take this tiny loss and just move on to a company that I believe in more. Now, because this is still in the portion of my portfolio that is SPEC stocks, I'm going to be taking these funds and future funds, and I'm going to be using those for a company like Tesla, which I still consider speculative because they have not been consistently profitable. But I think they will be in the future, and I think that eventually I won't classify them as a SPEC stock anymore, and they'll leave that portion of my portfolio. But in the meantime, I still consider them a little speculative, so I will take advantage of the fact that I've only got 2 SPEC stocks now. It'll just be Tesla and NIO. I will use some funds to buy more Tesla. Future funds will be going to Tesla. I honestly have no interest in buying any more NIO. NIO is a company that I'm just kind of taking a long-term gamble with that one, but I don't really, well, I don't want to get into it in this video. I'll make a future video on that one. But for right now, I like Tesla. I do believe in them a lot, so it makes more sense to invest more heavily in Tesla. Anyway, I think that just about does it for this video. Sorry if I was kind of all over the place. It's a little difficult to explain all of this in a short video. But anyway, I just wanted to give you guys this update. I hope you enjoyed the video. If you did, please consider hitting the like button. It really means a lot to me. And I'll catch you guys in the next one. Thanks for watching. Take care. Bye-bye.